Good morning. Good morning, Sanjay. Good morning, everyone. So today we pick up a topic that is quite different from what has been covered so far. No references to standards, no references to Ind AS directly. Of course, you do have references in questions and all, but yeah, there is no direct standard based approach, but rather more on the profession and ethics that is involved as far as we are concerned as members. So, when we talk about the overview of the chapter, so I'll be running it through your study module itself. So, our professional ethics stands on around four pillars. You have the Code of Ethics, you have the Chartered Accountants Act 1949, you would be having the council guidelines, and there would be recommended self-regulatory measures. So when we talk about the CA Act, that is again having four limbs. The first one being the membership of the institute. So it applies to all the members. Members could be chartered accountants in practice or in service. Then it moves on to categorize your misconduct, which is professional misconduct and other misconduct as well. So, as a chartered accountant, it's not necessary that it's not sufficient that professionally you do not have any misconduct and in your personal life or outside the profession, you can carry on any activity. No. Being a member of the institute, it is incumbent upon us to maintain high standards of ethics even in our other life, that is, life beyond the profession. Then you have disciplinary procedures and you have schedules to the act, that is, first schedule and the second schedule. So, this is the broad framework. Now, out of this, some portion of it is covered in your auditing and assurance paper, where the focus is on professional ethics from the perspective of an auditor. So that is what you will be dealing with in detail in that part. In this chapter, essentially the focus will be on the code of ethics, the conceptual framework that is there in that, and there will be key ethical issues or ethical dilemmas that will be faced by members in service. That is going to be the bigger portion of this chapter, because this subject is reporting. And when we talk about reporting, who are the ones who report? The preparers of financial statements. And who are the ones who prepare the financial statements? They typically would be the employees of the company. So if you have chartered accountants who are employees of the company, so obviously focus will tend to shift more onto such members who are in service rather than who are in practice. For those who are in practice, that will be covered in detail in your audit and assurance paper. We will just touch base upon them superficially as far as today's discussion is concerned. Okay. So when we talk about the code, ICAI being a signatory of IFAC, that is the International Federation of Accountants, it has adopted the new Code of Ethics effective 2000, that is the Code of Ethics effective 1st July 2020. Okay, so that is something that you can just have as your information. So the Code of Ethics, what does it do? It sets out fundamental principles of ethics for chartered accountants. Hereafter, we call them as accountants, reflecting the recognition and responsibility of the profession chartered accountant in public interest. These principles establish the standard of behavior expected of a chartered accountant. The code provides a conceptual framework that we are expected to apply in order to identify, evaluate, and address threats to compliance with the fundamental principles. What is this fundamental principles? We'll see as we progress today. The code sets out requirements and application material on various topics to help accountants apply the framework to those topics. All right. The principles laid down in Code of Ethics pertaining to case of audits, reviews, and assurance engagements, including independent standards, are dealt with in detail in the auditing paper. So here it is not covered in detail. So that is a conscious decision that is taken. Okay. So who is a chartered accountant? One who becomes a member of the institute. He is a chartered accountant. Okay. And he is liable to disciplinary action under section 21 if he is found guilty of professional or other misconduct. So, professional or misconduct, what does it mean? It shall be deemed to include any act or omission provided in any of the schedules of the act. Professional misconduct, these are just terms which are there for familiarization. You would already be aware of it as part of your day-to-day duties or as part of your basic understanding about ethics. Professional misconduct defined in part 1, 2, and 3 of the first schedule, part 1 and 2 of the second schedule. A member who is engaged in the profession of accountancy, whether in practice or in service, it applies to both, should conduct or restrict his actions in accordance with the provisions contained in the respective parts of the schedules. If a member is found guilty of any of the acts or omissions stated in any of the respective parts of the schedule, he or she shall be deemed to be guilty of professional misconduct. So you will have to carry out your activities as per the provisions containing in the respective parts of the schedules. Other misconduct defined in part 4 of first schedule, part 3 of the second schedule. These provisions empower the council to inquire into any misconduct of a member even if it does not arise out of his professional work. So it is going beyond the boundaries of profession. It goes into the personal lives as well. So therefore, you are expected to maintain standards of integrity even in your personal affairs, even in highest integrity, even in his personal affairs. So that would expose, if it doesn't maintain, then it would expose him to disciplinary action. So when we talk about types of schedules, we have first schedule and the second schedule. You would have studied this. First schedule, part 1, professional misconduct in relation to CAs in practice, at length in your audit paper. Professional misconduct in relation to members of institute in service. We have it here, but the number of clauses you can see, that is just 2. Professional misconduct in relation to members of the institute generally, whether it is in practice or in service, doesn't matter. Other misconduct in relation to members of the institute generally. So that is what is there. Second schedule, professional misconduct in relation to CAs in practice, professional misconduct in relation to members of the institute generally, and other misconduct. So this is what is there. But for detailed discussion, you will have to go to your auditing paper. Okay, so these are the schedules to, this is the, the clauses which are mentioned. Okay, so these clauses you could go through it, because in our solutions that we have, in the case studies that we have, typically your misconduct falls back into these clauses. Okay, when you see the when you see the questions that we do, you will have to base your answers on what is the non-compliance that the member has committed, and it falls under which clause or which schedule you would have to mention. Okay, all right. A member of the institute who is an employee shall exercise due diligence and not be grossly negligent in the conduct of his duties. So this is what is broadly applicable. So I hope you are now familiar with what all gets covered under professional ethics. Yes, any doubts so far? Okay, all clear. Fine. Let us move further. Compliance with the code. This is part 1. Now, the Code of Ethics contains requirements and application material to enable CAs to meet their responsibility to act in the public interest. You see, as members, we have a lot of, what you can say, we have a lot of trust riding upon us. Okay, so whether you are as an auditor, you certify or you comment or you give an opinion on the truth and fairness of the financial statements, whether it is your assurance engagements, whether it is your internal audit, whether it is a due diligence that you conduct. In all these cases, you have members of the public placing trust on whatever you report or on whatever you state. Okay, so it is a very high level of trust. Generally, if you look at the way the market perceives you, or the industry perceives you, or your client perceives you, is that once audited, we do not need to go for a second opinion. We do not need to go for a second view, because those are audited financial statements. They are expected to be compliant. They are expected to be acceptable. They are expected to be reasonably true and fair. Again, it's not absolute assurance, it's reasonable assurance. So there is a truth and fairness that is involved in all the material aspects in respect of whatever you comment, okay, or whatever you certify, or whatever you opine on. So that is the level of trust that typically is there. Even for members in service who are employed, they carry a separate level of trust as compared to the other employees in the organization. Okay. The typical, what you can say, the typical assessment is, if a chartered accountant has reviewed it, the numbers would not be grossly off the mark. The numbers would not be grossly off the mark. They would be aware of the repercussions. They would be aware of the repercussions. So that is the level of trust that this profession has developed in the society. So therefore, this trust is the outcome of the members who have been in practice, who have been in service, and who continue to remain so. Okay, so that is the legacy that we have, and the thing that we carry forward going ahead. So therefore, we owe it to the public, and that is why we need to be guided by a particular code to enable us to act on the right path, okay, to enable us to work ethically, to enable us to report ethically. Okay. A chartered accountant shall comply with the code. There is no exception. There might be circumstances where laws or regulations preclude an accountant from complying with certain parts of the code. In such cases, those laws and regulations prevail, and the accountant shall comply with all other parts of the code. What is that? For example, you would be aware, we will study further, but you would be aware that confidentiality is one of the most, what you can say, one of the fundamental characteristics that we need to have. Okay, we cannot, go around telling XYZ issues of one of the clients or your own organization to outside parties, even your own family members. Okay, you may use an example, but you should not name and point and blame or do such kind of things for persons or for entities. Okay, so confidentiality is a key factor. But suppose there is an income tax assessment, or there is a search and seizure operation, or there is an enforcement directorate operation, or a PMLA search which is going on. In all these cases, when they come to consult you as the auditor or the consultant of the client, or an employee of the client, at that point of time, confidentiality, though significant, will take a backstage, because now you are having statutory requirements to disclose. You are now having statutory requirements to disclose. So therefore, the laws will prevail over whatever requirements the code has prescribed. Okay. Statute is sacrosanct, and then comes the code. Statute is sacrosanct, and then comes the code. Are we okay with this? Yes?
Yes, sir.
The principle of professional behavior requires a CA to comply with relevant laws and regulations. Okay. Accountants need to be aware of differences in local regulations from the provisions as set out in the code, and comply with the more stringent provisions unless prohibited by law or regulation. Okay, so What are the 5 fundamental principles? Okay. You have integrity, that is straightforward and honest in all professional and business relationships. Objectivity, that is not to compromise professional or business judgments because of bias. So you have to be objective, you have to be unbiased. Professional competence and due care. Attain and maintain professional knowledge and skill at the level required to ensure that a client receives competent professional service based on the current technical standards, and act diligently and in accordance with applicable technical and professional standards. That is your professional competence and due care. Confidentiality, to respect the confidentiality of information acquired as a result of professional and business relationships. Okay. And last, professional behavior, comply with relevant laws and regulations, and avoid any conduct that the CA knows or should know might discredit the profession. So, all in all, these are the 5 cardinal principles that we are expected to comply with: integrity, objectivity, professional competence and due care, what you can say, confidentiality, and last one is professional behavior. These are the 5 fundamental principles that we have, and at all times in all our engagements, whether it is audit, assurance, uh, limited reviews, or whether it is your service, that is your employment, in all these cases these 5 principles must be complied with. A chartered accountant might face a situation in which complying with one principle conflicts with complying with one or more other fundamental principles. In such a case, the chartered accountant might consider consulting with others within the firm or employing organization, or those charged with governance, the institute or legal counsel. So many times what will happen is there could be a conflict between these 5 principles themselves. You comply with one and the other gets non-complied. Like that it will happen. So in these cases, it is a matter of probably you may need more expertise. So you go to others within the firm or the employing organization, or you reach out to those charged with governance, or you write to the institute itself, or have a legal counsel. But in all these cases, whatever be the opinion, it is you as a member who is responsible for the compliance or non-compliance, and not the persons whom you are engaging for an opinion. Are we okay with this? Yes.
Yes, yes.
Yes. So then next you have integrity. Comply with the principle of integrity, which is basically being straightforward and honest, A CA shall not knowingly be associated with reports, returns, communications, or other information where the accountant believes that the information contains a materially false or misleading statement, contains statements or information provided negligently, or omits or obscures information where such omission or obscurity would be misleading. Okay. So whatever numbers you present, they should be factual. You should not hide anything. Okay. You should not hide anything. You should not evade anything. You should not disguise your financial statements or anything that you present. Okay. And do not negligently provide data. Review whatever is being given, and uh, you may consider hiding some facts. Okay. So let me take you through an example. Okay. This was something that I had encountered over the past couple of years of experiences. So what the place where I was working in one of the companies, now that was a very working capital intensive company. Okay. It was a company where typically you had elongated working capital cycles. your collections were not flowing in properly, your collections were not coming in on time, even though you made a supply. And because of collections not coming properly, what would happen is you would falter, or you would miss the commitments to pay your suppliers. Okay. And when you would miss the commitments to pay your suppliers, ultimately suppliers would put us on credit hold. Credit hold means what? Until you make the payment, materials will not be released. Material does not release means your plant's operation would come to a halt, because we were lean in the sense that we would not carry excessive amounts of inventory, and it was a project based organization. So inventories would come in for that particular project only, and deadlines were sacrosanct. Deadlines of completion were sacrosanct. But this would typically bring a catch 22 situation. We were having a credit line from the banks, which was always completely utilized. In spite of that, we were failing on our commitments because our collections would not come on time. Our collections would not come on time. So the past practice that would happen was, there was a team. Okay, I mean, I will not discount anything. Okay, this was being done purely to to carry out operations. Okay, but what would happen is the team would, when they communicate with the suppliers, they would give some payment reference number to state that payment has been done in the view of getting the material. So the moment they received a payment reference, the suppliers would trust us so much that payment reference has come. That means payment would have happened. So they would tell their finance team, you check this reference. We are proceeding with issuance of material to this company. What would happen is that the payment references which were given would probably be incorrect, or there would have been some earlier payment references. All in all, the payment would actually not have happened. Okay, but we would get the material, and then they would again place us on credit hold. This would continue for quite some time, until ultimately the suppliers started distrusting us. They started to lose their trust. They said these people tell they have paid, and they give some payment reference number, and that is ultimately a useless number, because payment has never happened. So until they got a credit, so ultimately who was the loser in this? It was we only who lost, because that much time when the shipment could have happened, it was now spent in tracing. So what we did when we were part of the system was, first of all, stop issuing bogus communications to suppliers. By supplying us on credit, they are doing what you can say, they are doing their part of the duty. By not paying on time, it is our failure. Sir, but you didn't collect. That is a different part of the story. You not collecting should not be tied to you not paying as far as the supplier is concerned. Yes, that is your cash flow problem. But why should the supplier suffer? So therefore, what would happen was, we stopped the bogus payment references. If a payment had not happened, we would tell them payment would not happen. We would tell them payment would not happen for the next 7 days, 10 days, 15 days, depending on the visibility of our collections. What brought about the change was that these people, these suppliers who chose not to trust us, they came 10 steps forward to support us in whatever way they could. Some of them enhanced the credit limit from the credit duration. From 60 days, they went up to 90 days. Okay, because they also understood the business troubles that we would be facing. Okay, it is the nature of the industry. So when this happened, when you built a stable communication, a reliable communication channel, people automatically start trusting you. They came to know that if this entity sends a payment reference, it took us, it's not just within, one or two transactions. It took us a good 9 to 12 months before our suppliers again started trusting us. Okay. So that is what integrity does. That is what integrity does, right? You cannot be knowingly making a false communication. You know that it is false, but you cannot make a false communication. Is it okay? Yes. So that is
Yes,
what
sir.
integrity is all about. Objectivity, it requires an accountant not to compromise professional or business judgment because of bias, conflict of interest, or undue influence of others. Again, in this case also, being in the projects business, okay, what we would be doing was we would be supplying our finished product to the customer. We would supply it to the customer. And this supply would always happen under the cover of an invoice because goods have to leave our factory premises. They should be delivered. So therefore, the delivery would typically happen under the cover of a GST invoice. GST invoice kata hai matlab sale would have been recorded. But what was the fundamental requirement of the contract was that your supply would be integrated with other suppliers goods. Okay, so we would get one part of the contract, another 4 or 5 people would get other parts of the contract. So all these parts would be meeting at our customer's location. Customer would do the assembly activity, integration activity, and if the integration activity was successful, only then would they accept. Otherwise, they would be returning the goods wherever there was an error that was found. Now, you tell me, you have studied Ind AS 115. When does your performance obligation end? Does it end when you supply the material or does it end when integration is complete?
When integration is complete.
When integration is complete, when the final integration is complete. Now, in our case, because because the goods were supplied under the cover of a GST invoice, turnover would immediately get recorded. And because turnover would immediately get recorded, trade receivables also would go and sit in the balance sheet. So you would be having high current assets, you would be having strong revenues, but fact of the matter is all obligations are not fulfilled. So even though you have issued goods under the cover of a GST invoice, am I allowed to book revenue in this case?
No.
No. So what we did was we carried out a study of the contracts, and in all the cases where uh, there were these cases where you had certain commitments to be fulfilled at the customer side before being eligible for receiving the payment. So, in all those cases, we ensured that the moment goods are sent out, a revenue reversal JV, a manual JV would be passed so that the revenue does not get recognized. Trade receivables also does not get recognized, and follow up also would not happen. The moment the party agrees, then we would take it to the next level. Are you okay with this? So this was a bias free communication that we had generated. Are you okay with this?
Yes, sir.
Yes. Normally, teams have a bias to report high revenues. It is human nature. Okay. It is human nature because you want to see the growth. You want to see how exactly you are performing. Okay. So that is why that is your bias. We ensured we worked against the bias. Okay. So now I want you to read this question, illustration one. Okay. Just go through this question.
Yes, gone through. You're right.
Gone through. So what do I have? I have PAT. For this PAT, this is the bonus. So first thing that you need to understand is there an incentive to show high profits
Yes,
in this case?
yes,
Yes. So the first thing that you have to understand, it is human nature. It is common in all of us, myself included. Okay, I'm not excluding myself. We are going to take such actions which will maximize my benefit. Yes. So if I see an opportunity to increase the profit, I will do that. I will do that. Okay. So currently the P&L shows a profit of 2 crores. Okay. What is happening towards the end of the year? The company has sold land to a third party. Okay. For 40 crores. And under the sale agreement, it has an option to repurchase it with whatever you have paid plus a premium of 6%. Are you able to understand? Yes.
yes, yes,
And this money which came in was used to eliminate the bank overdraft. Now, this transaction has been treated as a sale with the profit on disposal arising in the statement of profit and loss. Are you okay with this question?
yes,
Yes.
yes,
Now, is this a sale transaction in your opinion? The land which is sold, is it a sale transaction or it is something else? I gave my land, I got 40 crores. After 1 month, I will give 40 crore plus 6% and get back the land. Is this a sale or is this something else?
yes, yes. It doesn't seem to be a sales because they are
Yes.
getting back money after 1 month, 40 crores,
You are getting back land after 1 month.
and a premium of 6%. It seems
ठीक है.
like a
So
loan.
it looks like a loan arrangement,
Yes,
right? I
yes,
needed 40 crores immediately, so I gave the land as a क्या बोलते हैं, collateral security. After 1 month, I got the land back in my name and I paid 6% interest. Are you able to understand?
yes, yes,
Yes.
yes,
So on instructions of the CFO, the transaction was treated as a sale. So clearly this is incorrect. Clearly this is incorrect. Okay. It it meets the condition specified in Ind AS 115 for qualifying as a repurchase agreement. Are you able to follow?
yes, yes,
Yes. So therefore, control is not transferred. Control is not transferred. Infostar must treat the transaction as a financing arrangement and record both asset and liability. Infosys should not have de-recognized the land because the risk and rewards of ownership are not yet transferred. The substance of the transaction is a loan of 40 crores with the 6% premium effectively reflecting interest payment. Are we able to follow?
yes, yes. Right.
Yes. Okay. Now, this is typically the last part of every question that you will see. What are the ethical issues? It appears that integrity of the CFO is compromised as he had accounted the transaction as a sale. The effect of accounting it as a sale just before the year is merely to improve profits and eliminate the bank overdraft, thereby making the cash position seem better than it actually is. Are you able to follow?
Yes,
Yes. So
yes, yes,
what they have done is essentially window dressing. What they have done is essentially window dressing. Accountants also must act with objectivity, which means they must not allow bias, conflict, or undue influence. Therefore, the management must put interests of the company and shareholders before their own interests. So here in this case, what is the compensation? More the profit, more the remuneration to the directors. Okay. Seems to be partly driven the transaction and subsequent accounting, which is clearly a conflict of interest. Are you able to follow?
Yes.
Yes. Okay, fine. So you can go through this part for your homework. It basically tells which is not complied with. Are you okay?
Yes.
Yes. Okay, fine. Professional competence and due care. Okay. Continuing awareness and an understanding of technical, professional, and business developments. I have worked in an office. I have worked. You need to write answers, Sanjay. Okay, you do need to write answers because it is testing you on your skills as well as your understanding of the provisions. So you do need to write. Of course, verbatim is not required, exact same length is not required, but you need to capture the essence. Okay, you do need to capture the essence. Okay, now professional competence and due care. What do you mean by this? See, today's times, can you sit with a pen and paper to tick and do your audit?
No.
No. You need to be technically sound. You need to be technically savvy. You cannot sit in some closet, do your audit with a pen and paper, and tell the client to bring a printout of every document that needs to be audited. That is simply exhibiting the fact that you are not competent enough to deliver the services under the professional requirements. Yes or no?
Yes. Yes.
And today it is no longer restricted to just an audit with pen and paper. Today, what management looks to you is for insights. They look to you for analysis. They look to you for value add. Okay. You cannot sit on a tabletop and point out mistakes or rather point out issues. You will have to be a part of the solution as well. Okay. Clients will implement, but ultimately it is your responsibility to see that. Uh, it is your responsibility also to see that the solutions proposed by the client is viable or not. Okay, that is where your professional competence comes into perspective. We had a generation of chartered accountants for their largely their practice tenure. They did their practice under the accounting standard regime. Yes, the AS regime. Suddenly, Ind AS came in. Not suddenly, but it did come in. So should these professionals be competent about Ind AS, or can they say that AS में क्या Ind AS में क्या ही है? Can they take that stand?
No. No. No.
No, you need to be professionally competent. Right now, Income Tax Act 2025 is on its way. Right? 1961 is getting phased out. Professionals need to have that visibility. Professionals need to have that visibility. Otherwise, they do not fit in. They do not fit in the place. The profession, the compliance requirements, the laws, regulations, and the business environment as a whole. All these factors are extremely dynamic in today's times. And therefore, your competence is what sets you apart from the others. Are you able to follow?
Yes. Yes.
Yes. Read illustration 2. Read illustration 2.
Yes, gone through.
Okay, gone through? Yeah.
Yes.
All right, fine. Now, let us understand. Are the directors acting unethically? What do you think?
Yes. I think
Yes,
that dismantling and dismantling and installation cost has to be brought in. It has to be capitalized, discounted at the discount rate, and capitalized.
correct. So you estimate the cost of dismantling in the future, discount it to the present value, capitalize it in the cost of asset. The provision amount that you have created, you need to unwind the discount so that at the end of the tenure, it will build up to the obligation and ultimately you will meet it out of that. So that you are aware of, that needs to be done. Okay, that needs to be done. Now, uh, not following this will result in a non-compliance. Now, what arguments they are placing? They are placing the argument that although prudence is mentioned in the framework, it is only one of the many ways of achieving faithful representation. Okay. What is the important point is it is a deliberate intention to contravene Ind AS 16 and not an unintentional mistake. Do you agree with this?
Yes.
Yes? All
Yes.
right. Now, though directors can exercise strong or undue influence, the chartered accountant is bound to act with integrity, recommending that Ind AS 16 and 37 must be complied with. You can raise it before the non-executive directors and ensure the financial statements comply with the relevant Ind AS. Also inform those in governance about necessary corrective measures. By communicating, the CA can ensure that contravention of Ind AS 16 and 37 is addressed and rectified. If he does not communicate the corrective measures, the fundamental principle of professional behavior will be breached. Members should comply with relevant laws and regulations and avoid any action that discredits. So, in all these cases, under which clause have you become? Under which clause have you become? What you can say guilty of professional misconduct? That is mentioned. So you can go through that. Are you able to follow?
Yes. Yes.
Yes. Next, confidentiality. What do you mean by confidentiality? You need to maintain, respect your client relationship and respect confidentiality of information acquired as a result of professional and employment relationships. Okay. Now, you would have seen, are you active on LinkedIn, Sanjay? Yes. Or are you keeping updated with some of the latest issues?
Yes. Yes.
Okay, so you may have seen that one or two companies have reported to the stock exchanges that their financial results before getting published inadvertently were put up as WhatsApp statuses on the were put up as WhatsApp statuses in by the directors or the members of the meeting or those who prepared the financials. It was put as their WhatsApp statuses, probably inadvertently. Now this becomes a serious breach of confidentiality. They were viewed by people before getting published. So, what is it? It creates what we call as an unpublished price sensitive information. Yes or no? Those who saw that data before the results were published, they came to know. So they already have access to unpublished price sensitive information. So confidentiality is of paramount importance. Paramount. Okay. In fact, in one of my cases, for a listed company, the management representation letter that was drafted, it was sent out to another client altogether. Before the audit was communicated and closed, the MRL was by mistake sent out to a third party. Ultimately, that person who sent this mail erroneously, he was asked to leave the organization. Okay. He was he was otherwise diligent, but this was a breach of confidentiality that happened. It is a privilege that we are having access to clients' data. Your client may be whatever he is, okay? Whatever he is, whether he is a man of principles or whether he is a pakka businessman, वो कुछ भी हो, it is a chartered accountant client privilege. Okay. It is his privilege to have you. It is your privilege to have him. You be honest with him. He should be honest with you. Though don't expect the other way around. Okay. Not necessary that he will be 100% honest with you. But you need to be transparent in your dealings. You need to be transparent in your dealings. So therefore, confidentiality is a principle that carries highest importance. And that is why clients value us for that. Okay. Be alert to possibility of inadvertent disclosure. The WhatsApp example I gave you. Maintain confidentiality within the firm or employing organization. Maintain confidentiality of information disclosed by a prospective client or employing organization. Do not disclose confidential information acquired outside the firm without proper and specific authority unless there is a legal requirement to do so. Okay, so if there is legal requirements, you are free to disclose. Do not use confidential information for personal advantage or advantage of a third party. Do not use or disclose any confidential information acquired as a result of professional or employment relationship after that relationship has ended. Take reasonable steps to ensure that personnel under the accountant's control respect the accountant's duty of confidentiality. Is it okay? Yes.
Yes.
So understand that fact. Having access to your client's data is a privilege. Do not misuse that. Okay? Do not misuse that. But when there is a requirement, when there is a statutory obligation on you, please disclose. When there is a statutory obligation on you, please disclose. Okay? Now, you can go through this when you can disclose in what cases. Okay? Whether it is for peer review of the institute or investigation or inquiry or to comply with technical and professional standards, including ethical requirements. Okay. Breaches of confidentiality may occur in scenarios like insider trading, hiding material facts which require disclosures like reporting fraud, illegal activities, or non-compliance does not constitute confidentiality. CAs have an ethical duty to report fraudulent or manipulative activities. Okay, a CA shall continue to comply with the principle of confidentiality even after the end of the relationship. Okay, whatever data you have had access to after leaving the organization or the client, that does not make you eligible to go on blabbering about that data. No, you will have to maintain the respect, the sanctity of the data that you were entrusted with. Okay, next. Professional behavior. Professional behavior, you have to ensure that you do your job in such a manner that it is outside the bodies of professional and other misconduct. And do not make exaggerated claims for the services or disparaging references or unsubstantiated comparisons. Okay, so do not mention something very high about yourself all the time, nor should you lower other people's image. Okay, nor should you lower other people's image. Any direct or indirect measures to advertise any professional or other facts which are in violation of advertisement guidelines issued by the council time to time. Is it okay? Yes. So that takes care of the 5 fundamental principles. Do we have any doubt here?
No, clear, clear.
All clear? Okay, fine. Now, those were your conceptual framework. The principles, what is there in that, that becomes your conceptual framework. Okay. I mean, that leads us on to conceptual framework. The chartered accountant shall apply the conceptual framework to identify, evaluate, and address threats to compliance with the fundamental principles. Okay. What is the framework? The framework is to identify threats to compliance, evaluate threats identified, and address the threats by eliminating or reducing them to an acceptable level. So, these are the 5 principles. You have to follow these 5 principles. There is no excuse. There are certain threats which, if you do not act upon them, they will break those 5 principles, one of those 5 principles. So, what you need to do, identify threats to compliance. Second, evaluate threats identified. And third one is you bring them to an acceptably low level or eliminate the threat. This is a very, very common questioning area by the institute. Okay. They will give you the case study. In the case study, they will give you what is your, what you can say, what is the objective. Okay. Like in our examples that you had, what was the scenario? Non-reporting of decommissioning obligation. Okay, non-reporting. So they have such kind of data. Now, that particular what you can say threat is given to you in the question. Okay, and then they will say what will be your reaction or what will be your action. In all such questions, there is always one option that exists: leave the engagement, cancel the engagement, do not take the engagement. Safest choice. Do you agree? Do you agree that it is your
Yes,
safest choice?
yes, yes.
Yes. But will you mention in the answer book for any professional ethics case that comes, reject the engagement, reject the engagement? Bhai साहब तब आप करोगे क्या? What are you going to do? Yes or no? If you go on rejecting engagements, काम क्या करोगे? Yes or
Yes,
no?
yes, yes. You cannot.
So therefore, in your exam, resign from the engagement should be the last option. Okay? There is no other way to resolve, then only you go for the last option. Are you able to follow?
Yes, yes.
Yes. So that takes care of conceptual framework, exercise of professional judgment. Okay? Fine. Okay. So this I have explained to you. You can go through this for homework. Okay. All right. Or if you want, can read through it now only. I have explained. Go through it now. It's not a question. It's just theory. Okay. Go through it and just come. Give
Okay,
me a minute.
okay. Yes, gone through.
Gone through?
Yes.
Okay, any doubt?
Can you explain a bit?
1 minute. So, when we talk about professional judgment, you need to have training, professional knowledge, skill, and experience commensurate with facts and circumstances. Okay. Now, see, I'll give you some basic example. Okay. Uh, you would have started your articleship maybe two,
Yes.
3 years back. Yes.
Yes. Yes.
अच्छा, जब आपने 2-3 साल पहले अपना आर्टिकलशिप शुरू किया था एंड यू फाउंड सम स्मॉल एरर इन सम वाउचर, सपोज किसी ने साइन नहीं किया है, व्हाट वुड बी योर फर्स्ट रिएक्शन?
Reported.
रिपोर्ट तो ठीक है, बट यू वुड टेक एन अल्टीमेटली हाइपरबोलिक व्यू, है ना? यू वुड गो टू द फर्देस्ट एक्सट्रीम एंड से सर यहाँ कंट्रोल है ही नहीं, वाउचर्स आर बीइंग पास्ड, आर बीइंग अकाउंटेड लेफ्ट राइट सेंटर विदाउट ऑथराइजेशन, यहाँ पे फ्रॉड चल रहा है. यू वुड यूज सच काइंड ऑफ लैंग्वेज, यस और नो?
Yes. Yes.
But with experience in course of articleship only, you come to know that sometimes, typically in promoter driven organizations, such lapses do happen, but that is not a cause of worry. Yes, that comes with relevant training, that comes with professional knowledge, that comes with experience. Okay, so this builds up your professional judgment. This builds up your professional judgment. Ultimately, when you are giving your auditor's opinion, if a voucher is not signed, will you issue an adverse opinion?
No. No.
No. It is not relevant to modify your audit opinion, right? So that is the important point. Judgment involves applying whatever you have experienced or whatever you have gone through. Okay. When you are taking professional activities, you need to exercise professional judgment. And he needs to apply the conceptual framework to make informed decisions about the courses of actions available and to determine whether such decisions are appropriate in the circumstances. You need to be absolutely cool. You need to be absolutely sure about what decisions you are making as a professional. Okay. Uh, I will just deviate from the chartered accountancy profession. Just look at, imagine a doctor. Okay. You are a patient. Okay. And you have certain blocks in your arteries. Okay. So what has happened is you went to your usual health checkup. You did your running on the treadmill test. The treadmill test showed adverse readings. So they suggested you to go for an angiogram. You went for an angiogram. There were some 2-3 blocks that were found in your arteries. Okay. And you are suggested to go for bypass. All these things are done by your cardiologist. Okay. When you go on the operation table, the cardiologist is not there. Okay, the cardiologist is not there. Cardiologist's job ends with the angiogram. He gives the video of the angiogram and he gives where the blocks are there. That is handed over to the cardiothoracic surgeon. The cardiothoracic surgeon is the one whose team will cut open your chest, gives you access to the heart. Now, when the cardiothoracic surgeon accesses the blocked areas, more often than not, he may find certain new things. He may find certain new challenges that he has to be, that he will be exposed to. And in the course of treating those challenges, his entire training, his entire experience, knowledge, skill, all of that will come into existence before he can make decision about a particular course of action that he has to follow. Yes or no? And he is dealing with a patient. It is a matter of life and death. Compared to a cardiothoracic surgeon, our job is so simple. All that we have is files, data, and financial health of our client. Yes or no?
Yes.
Correct? So, in that circumstance, your professional judgment comes into picture. Okay, your professional judgment comes into picture. You may notice certain non-compliances that have been happening all the way. But by moving from a non-compliant to a compliant position, you are not evading anything. There is just a non-compliance in terms of reporting. But neither your income is understated nor overstated. Your cash position is the same. Everything is the same. Balance sheet is not impacted. Just a manner of making a disclosure is incorrect. Now, your professional judgment tells you, your expertise tells you that this is a wrong disclosure. But your professional judgment will tell you whether you want to follow the correct disclosure and open a Pandora's box, or you want to continue with the seemingly harmless non-disclosure and continue with the financial statements. I'm saying a seemingly harmless non-disclosure. Okay, that is a professional judgment call every professional takes. Okay, nobody will just come and make all the rectifications all of a sudden. They will take their time to evaluate the issues. Yes or no?
Yes, sir.
Correct. So, an understanding of known facts and circumstances is a prerequisite. Determining the actions necessary to obtain this understanding and coming to a conclusion about whether the fundamental principles have been complied with also require the exercise of professional judgment. Okay. The chartered accountant might consider whether there is a reason to be concerned that potential information might be missing, whether there is inconsistency between the facts and circumstances and the expectations, whether expertise and experience are sufficient, need to consult with others, provides a reasonable basis, own preconception or bias might affect the exercise of professional judgment, other reasonable conclusions that could be reached from the available information. The reasonable and informed third party test is a consideration about whether the same conclusions would likely be reached by another party. Such consideration is made from perspective of a third party who weighs all the relevant facts and circumstances or could reasonably be expected to know the conclusions are made. Okay, so this is what is important. You arrive at a conclusion, you have to think whether a third party also will come to the same conclusion. Are we okay with this?
Yes, sir.
Yes.
Yes.
So that takes care of uh, this part. Now we move on to second part, that is dealing with members in the industry, people like us, people like me, or some of the faculty who probably have taught you are also in the industry. So this is what is there. Now, we are in a position of mid to senior level management. And typically we enter into public facing roles also. Okay. Like if it is a listed company, you have to present your financials to the stock exchanges, etc., etc., etc. So your position is a very, what you can say, your position is giving exposure to the public on what is happening in the organization. Okay, like you are the one who will communicate to the public. You are the one who will communicate to the public. Yes or no? So that is the way in which you are going to be viewed as. So many times you will end up being in a conflict of interest. You will end up facing conflicts of interest. Okay. For example, you could this could be in service, serving in a management or governance position for two employing organizations and acquiring confidential information from one that might be used to the advantage or disadvantage of the other organization. Typically, you work one company, and for better prospects, you resign and you move on to a second company, which is a competitor of the first company. Yes or no?
Yes.
Yes. Yes.
Yes. Yes.
So in that case, the data, the knowledge, the expertise you have from the first company, you can easily move it into the second company. You can easily move it into the second company. Second, undertaking a professional activity for each of the two parties in a partnership where both parties are employing the accountant to assist them to dissolve their partnership. Two partners are in dispute. You were the auditor. Okay, or you are the accountant in that partnership firm, the chartered accountant. Now they are splitting due to differences between them. And both the partners are hiring you. Do you think you will be able to do a fair work for both of them?
No, not possible.
नहीं होगा. Because you go to partner one, he will ask partner two क्या है. You go to partner two, he will ask what is the interest of partner one. In that, you will end up violating confidentiality. You will end up violating integrity also, because you are available to both. You are available to both. Okay. Preparing financial information for certain members of management who are seeking to undertake a management buyout. Conflict of interest. Okay. Next, being responsible for selecting a vendor when an immediate family member might benefit financially from the transaction. Okay, so when you are hiring a vendor, if he is somebody from your own family, it is a conflict of interest. Serving in a governance capacity in an employing organization, that is approving certain investments for the company, where one of those investments will increase the value of portfolio of the accountant or an immediate family member. These are all examples of conflicts. Okay. When you talk about conflicts, the CA should take reasonable steps to identify circumstances that might create a conflict of interest. What does it mean? Nature of relevant interests and relationships should be identified. The activity and its implication for the relevant parties. So, relation and what is the activity, these two things you need to determine. When we talk about threats created by conflict of interest, the more direct the connection between the activity and the matter on which the parties' interests conflict, the more likely the level of threat is not at an acceptable level, is not at an acceptable level. Okay. So that is something which is there. All right. Examples of actions: you could restructure or segregate certain responsibilities and duties, obtaining appropriate oversight. For example, acting under supervision of an executive or a non-executive director. Are you able to follow? Yes?
Yes.
Yes. So disclosure, normally what you do, disclose the nature of conflict of interest, obtain consent from relevant parties to undertake the activity when safeguards are applied to address the threat. Okay. Seek guidance. If you have any conflict of interest, escalate it. Okay, escalate it. Tomorrow it should not happen that a decision is taken and then they point fingers at you saying that he had a conflict of interest, that is why he has taken this decision. Are you okay with this?
Yes.
Yes. Go
Yes.
through this illustration.
Yes, gone through.
Okay.
Gone through.
What do you think? Is there a conflict of interest?
Yes,
Which is the line which says that?
the
This one.
chartered accountant has openly stated that
Recently
he
joined
cannot
the
afford
company
to
and has
lose.
openly stated that he cannot afford to lose his job because of financial commitments. Do you think this is the story of every chartered accountant in employment?
Yes,
More or less it is. Okay, more or less it is. Okay. And why only employment? Even in practice, you have your own commitments. You have your housing loan EMIs to be paid. You have your children's fees to be paid. You have expenses to run the house. You have a family. All these become your commitments. Okay. In fact, in one of the papers I was reading, that whom do companies prefer in high positions? They prefer people who are in debt, who have loans to pay. They prefer those people in high positions because those people can easily be made to bend. They are made easily to bend because they have obligations, they have commitments. They will not prefer a candidate who has no roles, because who has no obligations on his head. Why? Because that person does not have any commitments, and that person who has no commitments, he can be a very free person to speak his mind out against any malpractice that happens in the organization. Yes or no?
yes, that is right.
So, on a philosophical level, that brings us to the discussion that you keep your wants to the bare minimum. Okay, that is easier said than done. That is easier said than done. We would also want our children to study in the best schools. We would also want to have the best house to stay in. We would also want the best for our families. And when I have this inbuilt desire to uh, stretch myself, to stretch my finances, you inevitably fall prey to such ethical dilemmas, to such ethical conflicts. Now, in this case, the answer everybody knows. I'm going beyond. I will show you the answer, but you know the answer. Potential ethical conflict is there. Potential ethical conflict is there, right? So, the ethical and professional standards required by the chartered accountant are at odds. Okay. So, objectivity is compromised. He loses his sense of neutrality. Important part for all of us is being neutral. Okay. When I say being neutral, I don't mean not to take a stand. I mean, you should be in a position to tell if something is right, it is right. If something is wrong, it is wrong. You should be the one who is the conscience keeper of the organization. Many times we hear such statements made by top leaders. As finance, you are gatekeepers of our conscience. You are the ones who put us on the right path. You are the ones who give warning signals. But when we do give warning signals, the fallout will be finance is always delaying. Finance is always not concerned with growth. Finance is only compliance oriented. Finance doesn't understand business. These are the common things that finance teams have to face. This is reality. I'm not telling anything which is unreal. Okay, this is common reality. When you enter into a lease agreement, we will have 10,000 things to say. Is it of 11 months? Why only 11 months? Are you renewing it? How long will it continue? I have to recognize lease asset, ROU asset, and lease liability. What will be the discounting rate? Are you planning to renew it beyond such? Do you have any dismantling obligation? All these questions will come only because I know the accounting standards. And when I ask these questions, what will be the fallout? This fellow is asking too many questions. This person is not interested. Take it as 11 months and account it as rent. But you know that merely taking 11 months and renewing year after year means that it is not a short-term lease. It is a long-term lease for which 116 accounting has to be followed. Yes. So in
Yes,
all
sir.
these cases, you are You should be in a position to tell what is right and what is wrong. But in this particular case, the person is so much sunk in his financial commitments that he cannot say no. His objectivity is compromised. Because objectivity is compromised, integrity also gets compromised. And he will end up giving incorrect information by knowing it to be incorrect. Forecasts do not specify that they have been prepared as per Ind AS. However, professional competence requires to prepare the cash flow projections to the best of his professional judgment, which would not be the case if the projection showed a more positive position than actually anticipated. You can show rosy pictures, but you will have to question it. Are they realistic? For obtaining a loan, you will be showing rosy pictures. Yes or no?
Yes,
Yes.
yes,
So therefore, there is an immediate ethical dilemma. Put the interests of the company and professional ethics first and insist that the report to the bank be an honest reflection of the company's financial position. Should not allow any undue influence to override his professional judgment or integrity in the long-term interests of the company and its survival. It is suggested that chartered accountants should communicate to the directors to submit projected cash flow statement which reflects the current position of the company. Knowingly providing incorrect information is professional misconduct. To prevent such misconduct, chartered accountant should not provide projected cash flows. By adhering to ethical principle, he will maintain his professional integrity, contribute to trust and reliability. If he submits incorrect projected statements subject to professional misconduct, if he contravenes any of the provisions of this act. Are you okay with this? Yes, did you
yes,
understand?
yes, yes.
But let me move one step further. Is it so easier said than done?
No,
नहीं
not
होता
easy.
ऐसा. नहीं होता है. In reality, we all know what happens. Okay, which is why your companies, your corporate organizations, they need to have checks and balances in place. You need to have those charged with governance. There is a management team who always wants things to happen like this. Okay. Because they are the ones on the ground who are fighting. I'm not blaming the management also. Management will be ruthless because their task is execute. They know only one thing: execute, execute, execute. Anybody is an obstacle, they will try to bend that obstacle. If they can't bend that obstacle, they will go around that obstacle. But their task is to execute. In this case, I need the funds, I need to execute. So that is their goal in life. So that is how management is trained to do. Management is responsible for execution because if anything doesn't happen, it is the management who will be questioned why this has not happened. Now, in the course of execution, the biggest hurdle is finance. The biggest hurdle is finance. Why? Because finance comes with a lot of questions. Why? What are you doing? What will happen if you do this? What will not happen if you do this? What will happen if you don't do this? All these questions come from finance team. I'm not saying finance is wrong in asking questions. Finance must ask questions. But management is in a position to overpower the finance team because it is in a position of execution. It is in a position of execution. They will be overpowering. They will be overpowering. Okay. We had a case. Okay. See, have you handled import payments, Sanjay? Have you seen how import payments happen?
Yes, yes,
Okay. So you are well aware that on the RBI portal, there is something known as an IDPMS that needs to be complied with. Okay. You need to ensure your invoices get reported on the IDPMS portal. And when you make payments to import vendors, that IDPMS invoice needs to get knocked off. Okay. That would mean you have, when it gets knocked off, that is when the payment process is expected to end. Okay. What had happened in one of our cases was we had a credit hold with one of our parties because of certain unpaid invoices. Now, this party, what it had done was it had changed its name. Okay. Suppose its name was A became A1. Okay. So I had to make payment to A1. When it gave me invoice was in the name of A. But when the payment became due, the bank account was changed to name A1. Now, in the IDPMS, whose name was appearing? A was appearing. But payment is going to whom? Payment is going to A1. There is a mismatch. A and A1 are not same. A and A1 are different. Yes or no? So
Yes.
therefore, payments were stuck. Payments were stuck. We got on a credit hold. There was no issue with cash and all. Cash was there, but this was a legal issue that was there. Now, मटेरियल चाहिए, लाइन इज शट, लाइन बंद है, लाइन में काम नहीं हो रहा है, मुझे मटेरियल चाहिए, आई नीड टू प्रोक्योर द मटेरियल टू स्टार्ट द प्रोडक्शन एक्टिविटी. The top management team comes down on finance and they say, if you don't make payment to this party, we cannot meet the deadline. This is real example pressure, real life pressure. Finances, but कैसे करे? IDPMS में name is something else and bank name is something else. Even a name change certificate has been given, but that is also not working. Okay. So then what they said? No, IDPMS has to be modified. IDPMS modification takes time. Okay. It takes about 2 to 3 weeks. Okay. You have to go to your shipper, give the certificate. He has to file with the department, and once that filing is done, they will go through the documentation, and then in the IDPMS the name will be updated from A to A1. Itna time operations team ke paas nahi hai. So what do they tell you? No, they say that, sir, why do you pay against the bill? I say he will make an advance payment. Advance payment, you don't need much of a documentation. We will just make advance payment and then we get the material. We could do it, but problem is now there will be an open advance. Yes or no? Yahan pe there is an open vendor item, open payable. There is an open advance. You cannot knock off directly without proper reason. Yes or no? आप क्या बोल के knock off करोगे? I had to pay this, but because there was IDPMS issue, I did advance. That means what? Before RBI, you yourself will admit I scuttled the process. Yes or no? Is it possible? Yes?
No.
नहीं कर सकते आप. Because RBI will say, should have sorted this problem. Why did you create another open advance on the portal, on the customs portal? And RBI is absolutely right to question that. So therefore, this is the kind of pressures that are there. This is the kind of pressure that we do face. Ultimately, we spoke to the party, took their consent, took their time, resolved the issue, and then we did the payout. And then we did the payout. Yes or no? Yes.
Yes. Yes.
But key point is at that level, you have to not give in. You have to not give in to the management pressures. Now, finance will be seen as an obstacle. Management has a power to override the finance. Yes or no?
Yes.
Because ultimately वो बोलेगा finance के वजह से execution नहीं हुआ. And this is where most of the times structures collapse. This is the point where structures will collapse because management is dominating, overpowering, influential people within the organization who always have intention to execute without looking for anything else. Poor finance is always at the mercy of the management. Now, if we have strong governance structures, if we have strong independent directors, if we have strong audit committee, And in all these committees, independent directors, all these people, if they are bold enough to question the management, who do you think will have the upper hand? It is the finance team that will have the upper hand. Yes or no?
Yes, sir.
Because ultimately, these people are responsible for everything at the top. Yes or no?
Yes, yes.
So that is how it happens. You can ensure governance does not fail by putting in people at the right places and ensuring that those people raise questions. They question the management. Okay, they should not be ceremonial positions. Jaise, ceremonial position means what? Ceremonial position typically is like how we have our head of state in India, right? It is more of a ceremonial position. The prime minister is the actual person who is administering the cabinet and ensuring that all the roles are taken care of through his cabinet of ministers. So you have all the bills passed in the Lok Sabha, all the bills passed in the Rajya Sabha, and typically it goes up to the president for approval, and 99 out of 100 cases it directly gets approved. It's more about a ceremonial position that is there. Yes, the president is the supreme commander of our forces, but it is the defense under instructions from the cabinet that decides when to attack, and they take the attack forward. Okay, so all these cases, these are ceremonial positions. So governance structures in an organization should not be ceremonial positions. They should not be decorative pieces. Okay, they should be the ones who should question the management. When finance raises an issue, it should not be silenced. Then what will happen? Such chartered accountant who is under his own stress of personal commitments, he will come forward to raise the issue, to escalate the issue. Many cases it doesn't happen. Many cases it doesn't happen. Okay, but wherever it is possible, it should happen. Are you able to follow?
Yes, yes,
Yes.
absolutely.
All right, fine. Next. Preparation and presentation of information. Okay. You shall prepare or present in line with a relevant reporting framework. Prepare in a manner intended neither to mislead nor to influence contractual or regulatory outcomes inappropriately. Represent facts accurately. This is just preparation of reports. Okay, represent facts accurately and completely. Describe true nature of business activities or transactions. Classify and record information in a timely and proper manner. Not omit anything with the intention of rendering the information misleading or influencing contractual or regulatory outcomes inappropriately. Okay. So, using an unrealistic estimate with intention of avoiding violation of a contractual requirement, such as a debt covenant or a regulatory requirement, such as capital requirement for a financial institutions. This is an example of using an unrealistic estimate. Okay, next. Use of discretion. Use of discretion. Uh, Chartered accountant shall, preparing or presenting information might require exercise of discretion in making professional judgments. The CA shall not exercise such discretion with the intention of misleading others or regulatory outcomes inappropriately. Examples of ways in which discretion might be misused. Determining estimates for determining fair value estimates to misrepresent profit or loss. Selecting or changing accounting policy under the applicable financial reporting framework. For example, selecting a policy for accounting in order to misrepresent profit or loss. Determining timing of transaction. For example, timing sale of asset near end of the fiscal year in order to mislead. Determining structuring of transactions. Okay, so all these cases are use of discretion. When performing professional activity, CA shall exercise professional judgment. to identify and consider for what purpose was the information to be good, in which context the information is given, and audience to whom it is addressed. Audience to whom it is addressed. Are you able to follow?
Yes, sir.
Yes.
Yes.
Okay. Next. Relying on work of others. Such CA shall exercise judgment to determine what steps to take in order to fulfill the responsibilities. Is it okay?
Yes.
Okay, fine. Addressing information that is misleading, take appropriate actions. Discussing concerns that info is misleading with the superior, and such corrective action might include having information corrected if it is already disclosed, informing them of the correct information. You could have whistleblower policy, etc., etc. Okay, so this is something you already know. Okay, so now illustration 4, go through that.
Yes, gone through.
Done, gone
Yes.
through.
Yes.
So what are they suggesting? This is the lease example that we saw. They want to go for short-term leases by avoiding declaration of debt in the balance sheet. Yes or no?
Yes. Yes. It gives the
Yes.
exemption to short-term
Yes.
leases.
So okay. Now all this is the same thing that we saw. Important part is CFO fails to comply, subjected to professional misconduct under clause 1, deemed to be guilty of professional misconduct if he contravenes any provisions of this act or the regulations made thereunder, or any guidelines issued by the council. As per the guidelines issued, a member who is an employer shall exercise due diligence and shall not be grossly negligent in the conduct of his duties. Are we okay with this?
Yes. Yes. Yes.
Yes. Okay. Acting with sufficient expertise. You need to be honest about what expertise or experience you are having. Self-interest threat to compliance with the principle of professional competence and due care might be created if a chartered accountant has insufficient time for performing or completing the duties, incomplete, restricted, or otherwise inadequate information, insufficient experiences, training, and or education, inadequate resources. Are we okay with this?
Yes. Yes.
Yes. All right.
Yes.
Fine. Read illustration 5. Read this, then I'll move to the next page.
Yes, we can go to next page now. Yes, go on.
Okay. Can they do it? Can they show the difference in OCI?
No.
It has to go to the P&L, right?
Yes, yes.
So, directors are ethically bound to prepare financials which reflect true and fair view and comply with the Ind AS. It is the self-interest in the pension scheme that is making directors consider a change in accounting policies so that to maximize profits for maximizing their bonus potential. The amendment to the pension scheme is a past service cost, which should be expensed to the P&L during the period the plan amendment has occurred. This would impact the operating profits, thereby reducing the potential bonus. Are you able to follow?
Yes, yes, yes.
This is in
Absolutely.
fact the situation that is now happening after the new labor codes have been notified. Yes or no?
I have not gone through the new labor codes.
Okay, the new labor codes have prescribed certain treatments of gratuity, uh, what are wages, all of that is notified. This is giving rise to a high employee benefit expense in Q3 because we had to recognize it as at 31st December. It is giving very high results, okay, very high hits to the P&L. And that is expected. That is expected. All companies are taking this hit to the P&L. All of them are taking hit to the P&L. Are you able to follow? Yes?
Yes, yes.
All right. Now, many times what would happen is you would be having certain compensation, certain incentives linked to financial reporting. Okay. That point of time, how does it compare with your position or how does it hold with your position? Okay. Like manipulating price sensitive information, you have the opportunity. Hold financial interest in the employing organization, and the value of that financial interest might be directly affected by decisions made by the accountant. Eligible for profit related bonus, hold bonus share rights, participate in compensation arrangements. All these things are cases where the chartered accountant could enter into a conflict, Okay. Yes. Go through illustration 6. This is last illustration and then we take a break.
We can go to next page.
You can go to the next page.
Yes, gone through.
Gone through? Acha.
Yes, yes.
Now, what are they saying? They want
They,
to show that cash from investing activities are to be shown as cash under operating activities. Yes or no?
yes, yes.
Discuss ethical responsibility of the CA to ensure manipulation does not occur. Okay, to ensure manipulation does not occur. All right. Now, chartered accountants have a duty not only to the company they work for, but also to their professional body, that is ICICI, and to the stakeholders of the company. Proceeds received from sale of equipment and investment should be presented under cash flows from financing activity. Okay, in cash flow from investing instead of operating activities in line with Ind AS 7. You should follow the fundamental principles of professional competence and due care. In case accountant permits the treatment of the matter, it would result in a breach of the principle of professional competence and due care. This treatment may be treated by the accountant under pressure from the management. Are you able to follow?
Yes,
So
yes.
you should prevent the management not to proceed with this treatment. In case management insists, then CA should bring this to the attention of the auditors. Yes,
Yes, this was an investing activity, so they cannot show it in operating activities.
they cannot show it in operating activity. Okay. When you are going on break, maybe you could just see if you can read question 7 also. Okay.
Okay, okay.
Yes. So now we'll take a 15-minute break and then we shall continue and close this chapter. Okay. ठीक है.
Okay.
Break 15 minutes. Okay. So you can go through this question. Sanjay, you're there?
Yes, yes,
Acha, you
yes,
can
gone
go
through.
through. You've gone through?
Yes.
Okay. So now what do you think? They have been paying discretionary incentive for 15 years. Legally, can I stop this incentive?
No, no.
Legally, what is it? Is it a compulsory incentive
No,
or a discretionary
yeah,
incentive?
it is discretionary.
So
Discretion.
legally, they can stop it, right?
Yeah, they can stop it. I thought you said
But this is which type of obligation? Is it a legal obligation or a constructive obligation?
the constructive.
That means they cannot realistically avoid it, right?
Yes,
Now, what they want, director should get bonus. For that purpose, they will not give bonus to the employees. Yes or no?
yes, yes,
That is the whole case study. So, what are
yes,
the ethical issues? Now, this is the position. You can legally not pay bonus to employees, instead, pay to the directors. And in that, your employee satisfaction scores and all will start getting impacted. They will start getting affected. But nobody reads it, anyways, is what is the common argument that is given. So, ethically, what will be the situation? The company has no legal obligation to pay the bonus. It is, however, going to give rise to ethical consideration. The suggestion by the CFO will have the impact of reducing expense and improving profits. On moral grounds, it will have negative consequences for the company. Employees would be dissatisfied. When they see the directors withdrawing bonuses, it would have a negative impact on employee morale. Yes or no?
yes,
Yes.
yes,
Poor retention rates, reducing the wage gap, the metric will be adversely affected. CFO statement will not negatively impact the company is misleading. It will negatively impact because employees' satisfaction scores, etc., people will read it. It is a long-term success of the company that treatment of their employees people will be interested to read. Okay. So he has a responsibility to exercise due diligence and consider financial and non-financial information. It would be unethical for a chartered accountant to guide on matters which may result into any kind of disadvantage to the stakeholders. Okay. So that is how this whole thing pans out. Is it okay? Yes.
yes, yes, yes.
All right, fine. So that takes care of that. Then you have inducements, including gifts and hospitality. Many times you get gifts, okay? Minor acts of hospitality between business colleagues to acts that result in non-compliance. An inducement can take many forms: gifts, hospitality, entertainment, preferential treatment, employment, appeals to friendship, etc. So, chartered accountants shall remain alert to potential threats to the accountant's compliance created by offering of an inducement by an immediate or close family member to a counterparty with whom the accountant has a professional relationship, or to an immediate, suppose a family member gives gifts to counterparty or counterparty gives gifts to the close family member, immediate or close family member. In all these cases where the chartered accountant becomes aware of an inducement being offered and conclude there is intent to improperly influence the behavior of the accountant, he shall advise the immediate or close family member not to accept the inducement. Fair enough? Yes?
Yes,
There are some normal inducements which do come in our place. Okay, that is very common. Apart from that, if something abnormal comes, then you have to be alert. Okay, like for example, around Diwali or Dasara time, you give sweet packets. Okay, to all your clients, staff. Those are very common. There is no expectation of any favors to be given. but suddenly somebody comes out of the way and offers a 10-gram gold coin for no reason. Those are all things where eyebrows should go up and you need to tell your family members not to accept it. One of the factors that is relevant in determining whether there is actual or perceived intent to improperly influence the behavior is the nature of closeness or relationship between the accountant and the immediate or close family member, immediate or close family member and the counterparty, accountant and the counterparty. Okay, so this is something that you will have to see. Okay. Responding to non-compliance with laws and regulations in case of employment with listed entities. Okay. A chartered accountant might encounter or be made aware of non-compliance or suspected non-compliance while carrying out professional activities. Now, this will guide in assessing implications and possible courses of action when responding to non-compliance. Laws and regulations generally recognized to have a direct effect on determination of material amounts and disclosures, and other laws which do not have a direct effect on determination of amounts and disclosures, but compliance of which might be fundamental to operating aspects of the employing organization's business. For example, in the first case, applicability of CSR. Okay. Uh, what you can say is, for CSR, you calculate profits, right?
Yes, three
As
years
per
average
section
profit.
198. So there is a mistake in calculating profit under 198, because of which the CSR applicability itself has gone for a toss, or because of which the CSR amount so calculated is incorrect. That is the first example. In the second case, does not affect the financials. For example, renewal of factory and establishment licenses, renewal of consent to operate. These are all things which will not impact the financials. But if you don't do this, it will have penalties and other ramifications. Yes or no?
Yes,
So CA, the accountant could become aware to both of them. Most likely he will become aware to the first one, because second one though admin team is supposed to take care of. But he comes across such non-compliances. Now, when he comes across, he has a responsibility to act in the public interest. What are his objectives? Comply with integrity and professional behavior. Second, you alert the management, or where appropriate, you alert those charged with governance of the employing organization to seek to enable them to rectify, remediate, or mitigate the consequences of the identified or suspected non-compliance. You deter the non-compliance where it has not yet occurred and take further actions as appropriate in the public interest. Non-compliance comprises acts of omission or commission. You don't do an act which you have to do, it is called omission. Commission, you do something wrong which you had to do something right. It could be intentional or unintentional, contrary to the prevailing laws, committed by the following parties. Who are they? Employing organization, those charged with governance of employing organization, management of employing organization, other individuals working for or under the direction of the employing organizations. Laws and regulations could mean fraud, corruption, bribery, money laundering, terrorist financing, proceeds of crime, security markets and trading, banking, data protection, tax and pension liabilities, environmental protection, public health and safety. Okay. If protocols exist to address non-compliance or suspected non-compliance, consider to determine how to respond to such non-compliance. Are you okay with this?
yes,
Yes.
sir. Yes,
Senior chartered accountants who are directors, officers, or senior employees who are able to exert significant influence and make decision. Okay. For these senior chartered accountants, there is a greater expectation to take whatever action is appropriate in public interest to respond to non-compliance or suspected non-compliance. So those who are in higher management levels, they have more responsibilities than mid-management or lower mid-management category of chartered accountants. This is because senior chartered accountants' roles, positions, and spheres of influence because of their position, okay, within the organization. How will you address if the senior CA identifies the non-compliance? Discuss the matter with the immediate superior. If the immediate superior appears to be involved, accountant shall discuss with the next higher level of authority. Senior CA shall take steps to have the matter communicated to those charged with governance, comply with applicable laws and regulations governing the reporting, have the consequences of non-compliance or suspected non-compliance rectified, remediated, or mediated, reduce risk of reoccurrence, seek to deter the commission of non-compliance if it has not yet occurred. Additionally, the senior CA shall determine whether disclosure of the matter to the employing organization's external auditor, if any, is needed. Okay. That is what he has to do. Inform the management, see how he can prevent occurrence of that issue again, and communicate to the auditors if he feels it necessary. When further action is needed, he has to determine. Assess the appropriateness of the response. Examples of circumstances that might cause the senior CA to no longer have confidence in their integrity include situations where accountant suspects or has evidence of their involvement. Contrary to legal or regulatory requirements, they have not reported or authorized the reporting to any appropriate authority within a reasonable period. Further action that the senior CA might take includes informing management of the parent entity if employing organization is member of a group, disclosing matter to an appropriate authority, and resigning from the employing organization. Resigning is not a substitute for taking other actions. However, there might be limitations in some circumstances. Resignation might be the only course of action. Are you okay?
Yes, yes.
Yes. So resignation is an option, but that should be the last position that you take. Okay. Particularly in your exams. Okay. You cannot say, I'll resign, I'll resign, I'll resign. Okay. Then you will not be able to fetch the marks. Okay. Seeking advice, the senior CA might consider consulting internally or obtaining legal advice or consulting with the institute. Whether to disclose it to an appropriate authority would be precluded if doing so would be contrary to law or regulation. Otherwise, enable an appropriate authority to cause the matter to be investigated and action to be taken in public interest. Responsibilities of chartered accountants other than senior CS. If in the course of carrying out professional activities, CA becomes aware of information concerning non-compliance or suspected non-compliance, he shall obtain an understanding. If he suspects that non-compliance has occurred, then the subject to the considerations above, the CA shall inform an immediate superior. If the superior also appears to be involved, accountant shall inform next higher level of authority. In exceptional circumstances, the CA may determine that the disclosure to an appropriate authority is an appropriate course of action. If the accountant does so, that disclosure is permitted. Act in good faith and exercise caution. Okay, now go through this illustration. Illustration 8. Yes, essay 250, that's right.
Yeah, we can go to next page.
Okay.
Yes, gone through.
So basically, they want to disclose director's loan as cash and cash equivalents on the ground that it is repayable on demand. Yes?
Yes.
Can they do that? Answer is no.
No.
Because it's not cash. It's not cash commitments. It has no fixed repayment date, and likelihood of director defaulting also is not known. It should instead be treated as a financial asset. Is it at fair value? Will it never be repaid? In which case you need to expense it off. Are related party disclosure so will be applicable? So is it done? So you have breached two fundamental qualitative characteristics prescribed in conceptual framework, that is relevance and faithful representation. Two key enhancing qualitative features also get violated: understandability, verifiability, and comparability. Okay, you cannot, these three are also violated. Potential conflict of interest, which mandates a separate disclosure as a minimum. Further, compliance with Section 185 would also arise, which is probably why directors want to hide such loan balance under cash equivalents. They are responsible for financial statements required by statute, and thus it is their responsibility to put right any errors that result in financial statements not complying with Ind AS. Motivated by personal interest for masking this transaction, it becomes the consultant's responsibility to get the financial statements rectified, otherwise subjected to professional misconduct. Is it okay? Yes?
Yes, yes. Yes, okay.
Okay. Pressure to breach the fundamental principles. We have 5 fundamental principles which we should not breach. Sometimes you may come across such circumstances. A CA shall not allow pressure from others to result in a breach of compliance with fundamental principles. First. Second, a CA shall not place pressure on others breaching the fundamental principle. So he also shall not breach, he shall not put pressure on others also to breach. Okay, he might face pressure that creates threats to compliance with fundamental principles. For example, intimidation threat when undertaking a professional activity. Pressure might be explicit or implicit and might come from within the employing organization. For example, a colleague or a superior. External individual or organization such as a vendor, customer, or lender. Internal or external targets and expectations. Whatever these three can give you pressures, they will give you pressures. Pressures related to conflicts of interest. Bidding to act as a vendor to the CA's employing organization to select a family member over another prospective vendor. Discussing the circumstances creating the pressure and consulting with others about those circumstances might assist the CA to evaluate the level of the threat. Such discussion and consultation might include discussing matter with individual who is exerting the pressure, discuss with the superior, escalate the matter with higher management, internal or external auditors, those charged with governance. Disclosing the matter as per the employing organization's policies, including ethics and whistleblowing policies. Use any established mechanisms such as confidential ethics hotline. Consulting with a colleague, superior human resources personnel, industry or industry associations, or legal counsel. Example of an action that might eliminate threats created by pressure is the chartered accountant's request for a restructure of or segregation of certain responsibilities and duties so that the accountant no longer involved with the individual or entity exerting the pressure. Is it okay?
Yes,
Yes?
okay. Yes.
All right, fine. Go through this question. Illustration 9. Last illustration.
We can go to next page.
We can go to next page. Yeah. Yes. What do you think? Does the subsidiary appear to meet the criteria held for sale? Answer is yes. Okay. So it should be treated as a disposal group since a single equity transaction is the most likely form of disposal. Yes or no?
Yes.
Yeah. And therefore it shall be measured at lower of carrying amount and fair value less cost to sell. Carrying amount of dosti is net assets and goodwill less NCI. Impairment loss recognized to reduce dosti to fair value less cost to sell should be allocated first to goodwill and then on pro rata basis across other non-current assets of the company. COO is incorrect to exclude any form of restructuring provision. Since disposal is communicated to the media, constructive obligation exists. Ongoing cost of business should not be provided for. Only directly attributable costs of restructuring should be provided. Further operating losses should be excluded as no obligating event has arisen and no provision is further required for impairment losses of PE. Thus, a provision is required for 5.5 crores. That is 1.5 plus 4. Is it okay?
Yes. Yes. Okay.
That means this is the amount for which provision is needed. Ethics. Mr. X has committed several mistakes. He was unaware of which cost should be included within restructuring, failed to recognize there is no obligating event, expected to carry his own work with due care and attention for lending credibility to the financial statements. Accordingly, he must update his knowledge and ensure that work is carried out in accordance with relevant ethical and professional standards. Failing to do so would be a breach of professional competence. Also, CEO is looking for means to manipulate the financial statements. Neither is he willing to reduce the profits of the group, nor is he willing to create appropriate restructuring provisions. Both the adjustment which comply with requirements of Ind AS will result in reduction of profits. His argument that the management has a duty to maximize returns for shareholders is true, but such maximization must not be achieved at cost of objective and faithful representation. By threatening to dismiss Mr. X, CEO has acted unrealistically. Threatening and intimidating behavior is unacceptable. This has given rise to ethical dilemma. He has a duty to produce financial statements, but doing so in a fair manner would result in a loss of job for him. The CA should approach the chief operating officer and remind him basic ethical principles. In case Mr. X falls under due influence of COO and applies incorrect treatment, subjected to professional misconduct, blah blah blah. All of that is mentioned. Are we okay with this?
Yes. Yes.
Yes,
Yes.
quite what you have already done and studied, right?
Yes. Yes.
Okay. So now what I want you to do is I want you to go through question one. We have three questions from Test Your Knowledge. We shall finish that off. So, then we are good to wind up.
Okay. Okay. You've gone through.
Done? Yes. Tell me.
Yeah, lease liability has to be accounted for as per India's 116.
Yes.
So it cannot be expensed off as
It can. Okay. Fine. So that is the key point. See, you understand the situation, right? You understand the implication and you understand what is the correct accounting treatment. Yes or no?
yes, yes,
So you are also agreeing that there has to be a lease accounting that needs to be done in this case. Okay.
yes, yes.
Now, no invoice, all that is simply unwanted explanation which has no bearing. Up till here, it is okay for every one of us. Beyond this is what matters in professional and ethical duty chapter. Okay. What are the threats? There is an intimidation threat to the fundamental principles of objectivity and integrity. Further, since the managing director has flagged the risk that company may not obtain loan financing, there is an advocacy threat because financial controller may be compelled to follow an incorrect treatment to maximize chances of obtaining the loan. Is it okay?
Yes, but advocacy threat, he's not doing it on his own. It
See,
is because
advocacy,
she's,
what do you understand by advocacy threat?
it means advocating in favor of the client or the
So
employee or organization. Yes.
in this case, there is an advocacy threat because MD is saying you have to do this to get loan, right?
Yeah, that's what I'm saying. It is because of the intimidation. She is trying to
Correct.
intimidate him. That is why
So
he's doing advocacy.
intimidation is leading to advocacy threat.
Okay. Yes.
Yes, पहले
Yes.
intimidation अगर नहीं करोगे तो ये होगा तो ठीक है तो बोलो क्या करना है तो इंटिमिडेशन के बाद आता है एडवोकेसी राइट
Yes.
so do it like this so now you will be advocating yes or no
I got it. Yes, I got it. But it is because of the intimidation. That is what I'm
it is
trying
a
to say.
fallout of intimidation yes
Yes.
मतलब intimidation के बाद next step है advocacy threat okay
Yeah, yeah.
pressure is greater because the controller is new. Professional competence, the controller should ensure that fundamental principles of competence should be followed, which requires that you should be compliant with Ind AS. Okay, next. If managing director refuses application of Ind AS, disclose to the appropriate internal governance authority. If he is to bend under pressure, he would breach the fundamental principle of professional competence. In such a case, he would be subject to professional misconduct under Clause 1, Part 2, Second Schedule, which states that this. As per the guidelines, a member of the institute shall not be grossly negligent in the conduct of his duties. Are you okay with this?
Yes, yes.
So the main point in this question is not identifying whether issue is right or wrong. That you always do it correctly. The main point is answering which of the fundamental principles are getting affected and what is the remedy for it. Is it okay?
Yes, yes. Now got it. Yes.
In all the cases, the remedy will be escalation. That will be one of the common remedies. Okay.
Right.
And
Yes.
ultimate solution will be resignation, but never give solution of resignation. Okay. Yes, I mean, try
Okay.
as far as possible not to give resignation as a solution because it is not a solution. Okay.
Right. Okay. Okay.
All right. Astra Limited is a listed entity operating in defense and fiber optics. Okay, read this question.
Yeah, we can go to next page.
Yes.
Yeah, gone through.
Gone through? Done? Okay.
Yeah, done.
Tell me, should that invoice of 2 crores be treated as a revenue or not?
The property of the goods is not transferred
It's
and it
not
is not going.
transferred because when is the sale going to get over? The sale contract requires Astra Limited to deliver these goods to the location, that is delivery on site. What is happening? The goods were not moved to the service unit, but Astra Limited recognized the sale for the year. Is it correct?
Not correct.
What is that? Who is that? Padmaja's argument? फैक्ट्री बाजू में ही है, यहां से घूम के वहां जाएंगे तो 2 मिनट में पहुंच जाएंगे. We will reach that location in 2 minutes. Fact is, have you reached in 2 minutes by 31st March? If you were so confident, you could have left at 11 hours 58 minutes in the night on 31st March and done the delivery. Yes or
Yes,
no?
yes,
Why
yes.
did you not do? That is the fundamental point. Why did I not do the delivery? Because you did not do the delivery, she is hesitant to recognize it as a sale. And then you can see what all the finance controller is getting. 40% increment. She's already having her housing loan mortgage. She's having class travel. She's having chauffeur with, car with a driver. All these perquisites are given and they have promised more things also will follow. Yes or no?
Yes, yes.
So this is the kind of what you can say incentive that is given to show the numbers. Yes or no?
Yes, yes. Influence to influence the numbers.
Influence her decision. Okay. Sale of the fiber optic cannot be recognized on 31st March as the goods are not yet transferred to the customer's factory premises. This was one of, in fact, this question I think I had only drafted and put it in the study module. This was one of the cases that I took from the real life that I have noted during my career, right? Of course,
Okay.
thoda sa, you put a lot of exaggeration, all those kind of incentives and all, those are all pure exaggerations. But this is the kind of pressure that every organization goes through. We also had lots of pressure to report numbers because the managing director on 31st, every day, every time, every month, 31st, he would come in the evening at 6:30 p.m. and inquire what is the revenue, what is the billing, why only so much, it should be so much. And pressure would be on the revenue team to add more invoices. We have seen it with our eyes that this happens. Okay.
Yes, it's a very good example.
It is
Example.
bound to happen. Okay, it is bound to happen because they want to show the sale. They want to show the sale. Okay. One can always cross question as to why the movement of goods did not happen if crossing it over was a minute's job. कुछ भी हो सकता है. पैकिंग बचा हुआ रहेगा. इट मे बी पॉसिबल दैट गुड्स may not be packed or some inspection may be pending. Something or the other will be possible. The goods are not ready. But हमारा क्या सोच है, आज करते हैं इनवॉइस, कल सवेरे सवेरे पहुंचा देंगे उनको. इट्स, यू सी दैट the line between the ethical line is very thin. You can just cross it over and you will not even know you have crossed it. Okay, that is the level of integration finance needs to have with the operations team. In fact, we used to have, we were very good, the operations team people were very good, finance also was very good, but we used to have fights with the people when revenue had to be recognized and derecognized. 31st period close, first they would report the revenue to me and then we would analyze the revenue, and invariably 2 to 5 crores we would ensure revenue would be cut down, and that would always result in fights between operations and finance team. Ultimately, see, we have to stand these numbers before the auditors. So ultimately that is the requirement. See, today even if I agree kisko ladna hai yaar, chhod jane do, let us take it, you take that light casual stand before and report it for the month to pass ho gaya. Quarterly audit mein it will create an issue. In quarterly audit, when the things come up for review, that time auditors will come and then the question will not go to operations ko koi nahi puchega, because they will ask whom, how did finance allow this number to be booked as revenue? That is the question that finance has to answer. Okay, at that time in the meeting we cannot say, sir, you put pressure, operations put pressure. All those things ultimately boils down to the fact finance did not do its job. So no matter what be the discomfort you are causing, if you are causing discomfort for the right things, you are in the right place doing the right activity. Okay. Booking the revenue has resulted in an overstatement of revenue by 2 crores and consequent inflation of profits, assuming that company is making a profit on this sale, and understatement of inventory. What is the conflicts? Pressure to present favorable revenue figures and chartered accountants' personal circumstances. Then you have duty to stakeholders. Then ethical principles by exhibiting bias, objectivity stands compromised. Put the interests of the company and ethics first by representing correct revenue numbers. Being an advisor to the director, she must prevent deliberate misrepresentation. Do not allow undue influence to override her judgment. Further, knowingly providing incorrect information is professional misconduct. By adhering to the ethical principles, she will maintain her professional integrity and contribute to the trust and reliability placed in the work expected from her. If she signs the financials containing inflated revenue numbers, guilty of professional misconduct as per the guidelines. Are we okay with this?
Yes, yes.
Yes.
Yeah.
Come on to the last question. I think this is a repeat of what you have already seen.
Yes, we did this question already.
We have done this, right?
Yeah.
But you can go through. So basically, they do not want to show the lease liability. They want to have 10 month ke 6 leases. Okay.
Yes, it was similarly done.
Similar one. Na?
Yeah, yeah.
So when you look at the implications, yeah, to
Short-term lease. They want to
circumvent
take
the terms of the covenants. Okay. They are avoiding it. The company is aware that the treatment is contrary. So it is breach of fundamental principles of objectivity and integrity, likely to mislead the shareholders. Reminded of their ethical responsibilities, comply with Ind AS. If the CFO fails to comply with his duties, subjected to professional misconduct as per the guidelines. Is it okay? Yeah, I think it is all done. Okay. So with
Yes.
that, I think we have concluded this chapter on ethical, professional and ethical duty of a chartered accountant. So see, the major point, what I have seen over the past couple of batches is students don't have an issue on the technical correctness of the solution. Everybody is technically sound. Accounting by large is everybody's comfort zone, and everybody is familiar with India's requirements. So they know what is right. They will also write what is right, WRIT. They will write what is the right answer, RIGHT, the right answer. Okay. But the problem arises, you know what, in identifying which principles are violated, how it is violated, what is the remedy for such violation, and if violated, which clauses of the CA Act are are impacting the chartered accountant in service. Is it okay? So
Yes, yes. I
this
also think that is the problem I face right now
correct.
while doing the questions. Yes.
तो आप इश्यू समझ लोगे, आपको ये भी पता है कि कुछ गलत हो रहा है, लेकिन वो गलती जो हो रहा है, फ्रॉम एन एथिकल पर्सपेक्टिव वी आर अनएबल टू express it in the answers, and that is where students end up losing out on marks. Okay, a student knows that it is wrong. Yahan pe focus is not on index, which is why at the start of the topic I told you index is only going to be there here indirectly. But what is more important is the provisions of the uh, India,
Professional
the
ethics.
provisions of the ethics. Okay, that is the ethical code of ethical duties and all those things. That is what is more important. So only remedy to do this is you, when you do written practice, if you feel you are losing a lot of time writing big answers, you can avoid writing the technical correctness because वो तो आप लिख ही लोगे. But write on the second part, that is the professional and ethical implications. How to remedy that and under what clauses of misconduct will the member be subjected to. You write that for each and every question, I think you will be in a fairly comfortable position to write these answers. Okay. And do take a cue from your auditing and professional ethics chapter. Advanced auditing, assurance, and professional ethics. In that also, you will have case studies. Okay.
Yes, sir.
Those case studies will help you to understand how to write your answers properly. Okay. Yeah.
Yes, I will do that. Yes.
So with that, I think chapter is concluded. Okay. And I think your curriculum also is concluded. This is my last class before your exam. Of course, I think some revisionary sessions could possibly be introduced. But for now, I think, we are done. So
There is one chapter pending in this uh, for
technology
accounting and
wala.
technology. Yes.
Technology wala. So that I am not going to take anyways. That I think another faculty sir will take. So I think from my side, if you are there for the revisionary classes, well and good. If you're not there, I wish you all the very best for your attempt.
Okay.
Right?
Thank you very
You
much.
are
I will.
answering
Yes.
May month.
Yes. Yes.
May month, right? So it's not far. It's just around 3 months down the line.
Yes.
Okay. So wish you all the very best. I think if there is anything, please do feel free to reach out to the board of studies, to us. Okay. And do not hesitate. Wherever you get stuck, I think the faculty, all of us put together, will be more than happy to help you out. Okay.
Right.
Thanks a lot for the patient hearing over the last couple of months. Every day there have been two sessions, morning, evening, and it gets a little tight on your schedules. But yeah, largely I think if you are getting benefit out of that, nothing like that. Okay. So all the best,
Yeah.
and
Thank you.
we'll see if you want to attend the revisionary class, we'll again catch up in the revisionary sessions.
Yes, I
Okay.
will attend. Yeah, I will
Okay,
attend.
then fine.
Thank
Thanks.
you. Thank you.
Thanks. Thank you. I think session concluded. Yes, yes, yes. Thanks. Have a nice day.